This is David Petrick, Fitzstock Charts. I want to do a special video presentation on some of the Apple trades that we had in 2019. This was a special year of trading, and we had our best year by far. And we've had great performances since I launched back in 2013, but 2019 was a special year. And I take a lot of pride in what I do with the charts on scanning, looking for relative strength, relative weakness, and looking for historical chart patterns that can, basically they repeat themselves over time. And we're able to capitalize on a lot of those, and that's how we had some huge numbers this year, and that's how we had some huge numbers in the past. When you go to our website and you click on charts, you can see some of the historical chart patterns that we traded since I launched the service. And probably one of my most successful years trading was back in 2008 during the banking crisis. And I hit it out of the park with some of the banks that I was shorting, but I was basing this historical chart pattern comparison on the panic of 1907. And as you can see, if we have the Dow Jones on the right and the Dow Jones on the left, 1907 on the left, 2008 on the right, you can see the pattern repeat itself. So you had a topping pattern. You saw the 50 go through the 200-day, a death cross. You kept seeing pattern of lower highs develop. And I didn't get any of this shorting. I was late to shorting. And I want to make sure I'm right when I'm short. I want to see moving averages heading in the right direction of price. I want to see a topping formation. We saw an MA top or a head and shoulders top. And seeing the death cross and seeing higher lows and everything develop. You don't have to get in early when you short stocks. And I was able to short a lot of the banks that went lower in that time period. And it was all based on technical analysis. But this historical chart pattern comparison lasts for 13 plus months. Some of the patterns that we're looking at last for days. Some of them last weeks. And this one, in this case, lasted 13 months. It was a special year of trading for me. And I was on the right side of the downside of the market. And when I launched the service back in 2013, there was a lot of people getting crushed on Apple. And it was a good year because I was on the right side of Apple that year. And I had pointed out, this is, by the way, Apple of 2013, 12 and 13. And I have two Apple charts here. I wanted to show you a little historical chart pattern comparisons, Apple to Apple, actually, just a different time period. And this is what we use. I'll do an Apple to Google or a Facebook to Microsoft. I'll go back sometimes 20, 30. In the case of 1907, I went back further, but I'll go back looking for similarities. Market price patterns repeat themselves because they psychology and emotions. And, we're looking for technical data on charts that we're able to capitalize on because they repeat themselves. And then we use our rules of engagement to make sure we're on the right side, not just guessing. But back in 2013, we saw this death cross. And I was one of the few people that were bearish Apple, not because of the products, not because of what they do, or even the fundamentals. It was price was telling us not to be long anymore. And we saw the death cross, and we kept seeing lower highs, lower lows, just like I saw with that 1907 crash compared to the 2008 financial crisis, right? When I launched the service and we came in, we said we don't want to be bottom pickers. We use simple rules of engagement. We use price above the 10-day simple moving average. I do a lot of testing, back testing, and I do all my scans manually. I don't press a button and say, hey, it's time to buy Amazon, right? I'll scan and get 10, 20 charts that look the best using our methodology. Then I'll see if I can find a historical chart pattern comparison to base our thesis on where this could go. And in Apple, there was a couple of bearish historical chart pattern comparisons I used, but one right now we're looking at is in 2000. This was 2008, and you can see, so I had death cross when I launched that service in 2013. And we saw a death cross right here on September 2008. And similar pricing patterns. You saw a double bottom in 2013. You got your double bottom right in here. And then eventually we saw a golden cross, 50 back to the 200, 50 back to the 200. And you can see price pattern repeats itself. So I don't want to spend too much time on that historical chart pattern comparison. Let me blow up this chart a little bit more. Before we continue with Apple, I just want to quickly look at, because we had a phenomenal year of trading. In fact, this was our best year. Currently, we're at 89% of the trades or winning trades. We had 478 trades go off this year. We had 233 different options trades that are up over 90%. Some of them are up 200, 300, 400%. And we've had 1,175 different trades since we did launch the service back in 2013 that are up over 90%. Some of them, like Tesla, went up over 600%, the options. But I've been trading for over 20 years. I have a proven methodology. I take pride in teaching it and teaching people how to trade stocks, futures, options, whether it's day trading or swing trading. And we use a daily email update service with our focus list. And I do weekly educational videos twice a week with chart analysis. And you have access to my private Twitter. And that's what we do. And a lot of times during the day when things are slow, we'll post that you can use the same methodology on a smaller time frame, which is 5-minute charts. We call it 5-minute ROE, 5-minute rules of engagement. And you don't have to day trade by all means, but if you have the time and you're aggressive, you can day trade. If you're a swing trader, it's real simple. You wait till we trend and you put your positions on and you scale and you add to them on price strength confirmation, which all the archive educational videos go over on the website. Anyway, this is back when we launched the service, and you saw we had some great performance numbers. But right in here was the first, we got long Apple. And just before we go over 2019, because this was historical chart pattern comparison we used here, where we got long Apple here for a couple of reasons. I do not like, we're never going to get the bottom. I don't like the bottom fish. But let's blow this up a little bit. This low on Apple came with MACD not at new lows. We call that bullish divergence. Is that a reason to get long? No. We have to get back above here and we have to get MACD heading in the right direction. So we did right there, right? MACD bull cross, price above the 10 simple moving average. We got long, those calls went up 123%. We didn't fall in love with the trade. We scaled, we put our stop in because Apple set up short right here. Those paid 139. Okay, so then we saw a double bottom. A lot of times chart formations will either do an inverse head and shoulders or a double bottom, which turns into a WV later. You can see this W as a V right there afterwards. And that's even more bullish price strength confirmation. We're going a lot higher. So anyway, we got long again in here after the double bottom because we had price back above the 10 SMA and we had our MACD heading in the right direction. So we had rules to engage long again. And we hit out of the park. We hit out of the park again. We added. We hit out of the park again. So 3 straight times, these options went up 300%. So you didn't have to get the bottom. You didn't have to fight this whole way lower. You just had to be patient and wait. We've traded bottoming processes now with Win, with JP Morgan, with Facebook, with NVIDIA, and with Apple, and with many others. But those were just some examples that I remember recently. So it's never about picking the bottom. It's always about having a methodology that works for you, trying to find historical chart pattern comparisons, which is what I do. I scan thousands of charts looking for to give us an edge in trading. But 2013 was a special year also because you didn't have to get the bottom. You just had to wait. We saw the golden cross, the 50 through the 200 here. And then we saw many more ads of getting long here. And by the way, our number one trade is a bull flag, thrust higher, trade sideways for a couple days, a bull flag breakout with MACD confirmation. So after all these great long trades, we had our number one trade here. This is a bull flag breakout to a new high with MACD at new highs. So we saw 1, 2, 3 more entries. Basically all 3 doubled. This was up 93%, 188 and 150. So we've had 36 trades in Apple that are up over 90% since I launched the service back there in January 2013. So let's get to what's happened this year in 2019. What did we see in the charts? And by the way, I did a video a long time ago that I put on a public Twitter feed about don't fall in love with Apple. And I've seen a lot of good traders fall in love with whether it's Roku this year or Amazon last year, or whatever it is. There's always stocks to trade. Never fall in love with any stock, especially based on fundamentals or what they do. That's not what you fall in love with. What you do fall in love with is price pattern. And you allocate the amount that meets your risk profile, whether you're buying calls or buying the underlying stock, whether you're buying 100 shares or 10,000 shares. You're buying 5 calls or 50 calls, whatever it is that meets your risk profile, all right? These specific ones, by the way, all the ones that come out on our daily update are for the stock. And then I also list the option if you trade options. So you could have been long stock here at 160, and now it's almost doubled that from where it was in January. But anyway, we had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 just this year. 11 options, or 11 times it was on our focus list that the options are up over 90%. Now, obviously, you can take stock too. You're not going to make as much in percentage terms, but just this one alone basically doubled your money. All right, so let's talk a little bit about what we do. We look for, like we said, we have a specific methodology. We use 10 SMA, we use MACD, I use historical chart pattern comparisons. We look at higher time frame, relative strength, a lot of different things. But we have basics that we need price above the 10-day. That's just the basics. And once again, I'm doing all the work. All you do is open up an email and say, hey, this stock is on our focus list. It lists the price. It lists the options if you trade options. And if we're in an uptrend and your risk appetite is to go long, that's what you do. But let's look at the setups. Right here, this was early in the year, right? So we didn't have to catch the bottom, right? You could get long in here. So let's look at that real fast. These, let me blow it up so you can see. This low right here came right here. MACD was not at a new low. So right here was your first heads up. All right, maybe we could be bottoming because price hit a new low without MACD. That's your first sign. Now we want to either see an inverse head and shoulders, which is a low print with a left shoulder over here and a right shoulder over there, which is a little bit higher, and then develop, or do a double bottom. This is not really a double bottom. It's really not a true head and inverse head and shoulders, but it's close enough. So you got your head, your left shoulder, your right shoulder after bullish divergence. So you could get long up in here if you chose to. I believe we got long here because now it's above 2 moving averages. And by the way, we have this new thing out which we call grade your trade. So any trade, whether you like or I like, you can also grade it. And we use up to a 10-star. You could have a 10-star trade, a 5-star ROE trade. But right in here, you got to remember our number 1 trade setup's a bull flag to new highs. That's a 10-star ROE as long as weekly time frame confirms price. I don't want to talk too much ahead of what we're doing, but you have your rules to engage here. This is not a 10-star ROE trade, but it worked, right? February 165 calls up 200%, doubled up on those 260%, right? Bull flag, not the new highs, but above a downtrend line, above the 10 SMA crossed through the 50 SMA. Now we're getting a little tricky because we're sandwiched between moving averages. We know probably this is going to be resistance. So we had price strength confirmation to add. So after we put these on, we scale, we pay ourselves, we wait. We have runners on, right? We wait. We either get stopped out on our runners after we raised them, or we look to add on price strength confirmation. We're adding in here, right? With probably a stop, I believe I listed right down in here. So the trade doesn't get stopped. You take a little bit of heat and it ends up paying again. And then what happens? You scale, pay yourself, you add on price strength confirmation, right? This thing blows up and you're scaling again. So now you got all these four good trades on right here. What does it do again? Shows price strength confirmation again. So this is 1, 2, 3, 4, 5 times in a matter of, 3 months that we essentially had options that doubled. If you wanted to buy stock, you could have bought the stock here, 165, 172. You got as high as 211 there. Not too shabby, just using a simple methodology of looking for relative strength, looking for rules of engagement, looking for historical chart pattern comparisons, which is what I do. It's what I provide subscribers for. So what's going on now? So the stock basically falls out of trend, starts falling out of bed. If you went long here, you've already scaled, you get stopped on your runner. And what does that mean? If we scale, let's say we have 1,000 shares on, scale 500, scale 250, we scale 50% and 75%, and then we hold a 25% runner. We wait for price strength confirmation to add, or we raise our stop to our entry after our 3/4 scale. So this one gets stopped for that entry, gets stopped in this entry, once again, after we've already paid ourselves. These ones probably here get stopped. If you got in early down there, you're still long, right? This thing doesn't set up, by the way, you could have went long in here. I don't know if we went long or maybe just those options didn't go up 90%. Right now, we're just looking at the options that went up 90%. By the way, I'm sure it was on the ESFL here. But anyway, our next September, this is an interesting trade. I do have to point out there was one trade, and it's not listed on here, which is super important. This is super, super important before we get to the winners, because everybody is going to have a losing trade. And although we had a great year, we batted 890, we've batted over 750 since we launched the service, we, along with everybody that's a human, have losing trades. And you have to know how to manage them. All right. This was a trade that actually was on the ESFL. There's two ways that we trade this type of breakout. Is if you see price strength confirmation, or we also use a 61.8 fib, which this hit and triggered and got stopped. So day traders get stopped at the low of the day. Hybrid traders get stopped at the previous day's low. Swing traders get stopped at the ESFL stop, which was probably here. So that was a trade that we rolled snake eyes in. And I'm not too proud, to say anything different, because this is a trade that didn't work. It's not like anybody made a mistake by putting it on. It just didn't go in your favor. And I'm telling you right now, you could bet 900, you could bet 750 and still lose money if you don't define your risk. Because we've seen stocks go like this and come all the way down here. People don't use stops. So risk management remains the number one priority in trading. The number one focus you should be is focusing on your risk management always. Options are not for everyone. Futures are not for everyone. Stocks might not even be for everyone. So, and by the way, if you're trading options, by all means, paper trade them and do your research on how to trade them. I'll educate you a little bit more once you learn basics, but they are extremely risky. And if you traded options here, you probably easily could have lost 50% allocation. So I think that's very important to not just discuss winning trades, but losing trades too. But anyway, so what happens here? You saw some price strength confirmation. I believe we had September 205 calls on versus this. Oh, wow. We took heat on this again right away. It went down 3 straight days, ended up getting paid, and then paid much more. Added on price strength confirmation, 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 and added on price strength confirmation. These calls, 95, 90, 170, 93, 106, 90, they easily make up for when you roll snake eyes if you define risk. If you see this pattern and you don't stop yourself out, the beginning of the video, what did I show you? I showed you panic in 1907, 2008. We also showed you the collapse in 2008 of Apple. So you don't know if this thing turns into something bigger, and that's why you have to define your risk. Most important thing in trading is define your risk. I do that with our focus list. I list an engagement price that we're getting in, options to use, and a price we're wrong to use as your stop, your hard stop. So once again, if you got long at 217 and you knew your stop was 200, you're losing 17 bucks. That's less than 10% on the stock, right? And look at all these that doubled with the options. And look at all these, by the way, if you were a swing long trader, you weren't a day trader, you weren't a hybrid trader, and you're probably still long from what we talked about early in the video, some of these entries that never got stopped. Here at 80, here at 85, here at 91. What else didn't get stopped? This one didn't get stopped still. 65, 62, 59. So go all the way back to 2013 when we started trading with my website, with my service. There's some people along Apple still from 60 bucks that are swing traders. But I'm going to tell you, just like anybody out there that's trading, The reality is you will have losing trades too. And we just talked about one that didn't work. So in summary, I wanted to go over some of the trades we did this year, some of the trades we did since we launched the service. We've had crazy good numbers. That doesn't mean it's going to happen next year or continue that way. More importantly, we have defined structure. We have a proven methodology. We just, once again, we went over that 90% club. We have well over 1,000 different trades that have doubled. We do have losing trades. Everybody has losing trades. Risk management is the most important thing in trading. But if you're interested in learning more about what we do, come to my website at fitzstock.com, or you can email me at fitzstockcharts@gmail.com.